Hi there guys, thanks for tuning in again. Today's topic, national insurance. Riveting stuff, I'm sure you'll agree. Right, national insurance, or NI for short. This applies in the UK. Most developed countries around the world will have their own equivalent systems, but there are big variations in terms of rates and what is or isn't covered. So what is it? Well, basically, it's a government safety net. It's not strictly speaking a tax. Employees and employers both contribute towards it. If you receive monthly or weekly pay slips, you will probably see the letters NI somewhere on there, together with an amount deducted. It funds a variety of things, but these can be broken down into 4 general areas. So these are the NHS, unemployment benefits, sickness and disability allowances, and the state pension. Now, the amount of national insurance you pay depends on your earnings and whether you are an employee or self-employed. Also, if you are not working but are claiming benefits, you are treated as having paid national insurance for the purposes of qualifying years. So what do I mean by qualifying years, and why is that important? Well, under the current rules, you need 35 years of qualifying years to receive a full state pension. The state pension is likely to form a key part of most people's retirement income. Now, in some circumstances, you may find yourself not paying national insurance. Here's 2 scenarios when that could happen. 1, you might not be working or claiming any benefits. For example, if you're a housewife or house husband and your spouse is the sole household earner, but he or she is very well paid, and so you aren't eligible for, or maybe you don't feel the need to claim any benefits. Or 2, second scenario, you're self-employed, but the business is either loss-making or makes a small profit, and so you fall below the threshold for paying national insurance. Now, although not paying national insurance might initially seem like a very good thing, these scenarios could be a concern, because if you miss the qualifying years, you might not be entitled to a full state pension. That is when you reach state pension age. Now, which under the current rules, that will either be aged at 66, 67 or 68, depending on your date of birth. It is possible to find out your level of qualifying years, and you can do that by writing off to the Department of Work and Pensions, or DWP for short, using what's called a BR19 form. And it's also possible to pay a surcharge to top up your levels of qualifying years if needed. Just a caution, nothing in this video is personal advice. It's just general information only. The details around national insurance contribution levels are complex, and historically there have been various different versions of the rules. Depending on your age, some of these legacy rules may have affected your past contributions and current entitlement. Please use this video as a starting point for your own reading, or consult an advisor. Feel free to leave a comment. Thanks again.